How to select the best sectors for long-term investment, the step-by-step tutorial. Most investors fail not because they picked the wrong stock, but because they picked the wrong sector. Want to know which sectors could 10x your portfolio in the next decade? Stick around. Are you tired of investing in companies that never seem to grow? The secret isn't always the stock, it's the sector. In this video, I'll show you how smart investors choose winning sectors for long-term gains. Welcome to this comprehensive guide on how to select the best sectors for long-term investment. If you're someone who wants to grow your wealth steadily and smartly, understanding how to choose the right sector is just as important as picking the right stock. In this video, I'll walk you step by step through everything you need to know, from sector basics to analyzing trends, risks, and financial data. Whether you're a beginner or someone with some investment experience, this tutorial will help you make smarter, long-term investment decisions. Now grab your notebook, because we're diving deep. What exactly is a sector? A sector is a group of businesses or industries that offer similar products or services. Think of it like a category, like healthcare, technology, or energy. There are 11 major sectors in the stock market, according to the Global Industry Classification Standard, GICS. Let me briefly run through them. 1. Information technology. 2. Healthcare. 3. Financials. 4. Consumer discretionary. 5. Consumer staples. 6. Energy. 7. Industrials. 8. Materials. 9. Utilities. 10. Real estate. 11. Communication services. Each sector performs differently depending on the economic cycle, government policies, and innovations. Understanding the nature of these sectors is the first step to long-term investing. Now let's talk about why selecting the right sector is crucial. Sectors are like the engine rooms of the economy. Some sectors perform better during economic booms, while others remain steady during downturns. For example, technology and consumer discretionary tend to do well during expansion. Utilities and healthcare perform better during recessions. If you invest in the wrong sector at the wrong time, even the best company in that sector might underperform. So sector selection acts as a filter to help you reduce risk and enhance returns. Let's dive into how the economy affects sectors. There are 4 stages of the economic cycle. 1. Expansion. 2. Peak. 3. Contraction, recession. 4. Trough, recovery. Different sectors thrive in different stages. During expansion, tech, financials, and consumer discretionary perform well. In a peak, energy and materials do well. During a recession, utilities, healthcare, and consumer staples are safer. During a recovery, real estate, industrials, and discretionary start gaining again. So if you understand where the economy is in the cycle, you can align your investments accordingly. When choosing a sector for long-term investment, ask yourself: 1. Growth potential. Is the sector expanding rapidly, e.g., AI, green energy? 2. Stability and demand. Is it recession-proof like healthcare or utilities? 3. Government policy. Are there subsidies or regulations supporting it? 4. Innovation and trends. Is the sector evolving, e.g., fintech in financials? 5. Global demand. Is this sector essential in both local and global markets? For instance, renewable energy has strong growth potential due to global climate goals. Tech keeps evolving, creating opportunities in AI, robotics, and automation. Here are tools you can use for sector research. 1. ETFs. Check performance of sector ETFs like XLK, Tech, XLV, Health, XLF, Financials. This gives you an overview of how each sector is performing. 2. Economic reports. Read government and IMF economic forecasts. 3. Company earnings reports. Look at the top companies in the sector. Are they growing? 4. News and trends. Read financial news, Yahoo Finance, MarketWatch, Bloomberg. 5. Stock screeners. Use screeners to filter stocks by sector and financial strength. Always combine these tools to make a more informed decision. Let's break it into a step-by-step process. Step 1. Identify your goals. Are you looking for growth, income, or stability? Step 2. Assess the economic cycle. Where is the economy now? Use news and GDP reports to assess. Step 3. Choose 2 to 3 promising sectors, based on economic conditions and your risk appetite. Step 4. Analyze historical performance. Use ETF charts and sector indexes over 5 to 10 years. Step 5. Dive into the fundamentals. Check revenue growth, profit margins, and innovation. Step 6. Look at leading companies. Who are the giants in the sector? Are they financially sound? Step 7. Test with paper trading or small investments. Before going big, test your theory. Repeat and rebalance yearly. Here are some of the most promising sectors in 2025. 1. Technology. AI, cybersecurity, cloud computing. 2. Renewable energy. Solar, EVs, hydrogen. 3. Healthcare. Aging population, biotech. 4. Financial technology, fintech. Digital banks, payment processors. 5. Consumer staples. Essential goods, recession resistant. 6. Utilities and infrastructure, especially with government infrastructure bills. 7. Real estate, rights. Long-term wealth and passive income. Make sure you assess based on your risk appetite. Here are mistakes investors make when selecting sectors. Chasing trends without research, just because it's hot doesn't mean it's sustainable. Ignoring the economic cycle, timing matters. Putting all eggs in one sector, always diversify. Following hype without data, use data, not social media trends. Neglecting rebalancing, what worked in 2020 may not work in 2025. Avoid these, and you'll be ahead of most investors. Diversification means spreading your investments across multiple sectors. This reduces your overall risk. For example, if you invest in 40% tech, 30% healthcare, 20% consumer staples, 10% real estate, then if tech goes down, others can balance it out. Use ETFs or mutual funds to diversify easily. Remember, you're not just betting on one idea, you're building a portfolio that can last decades. Let's recap what you've learned. What sectors are and why they matter. How economic cycles impact sectors. Factors to analyze when selecting a sector. Best tools to use for research. A 7-step process for selecting sectors. Top sectors for 2025. Mistakes to avoid and why diversification is key. Your action plan. 1. Start tracking sector ETFs weekly. 2. Identify 2 sectors that align with your goals. 3. Use the tools mentioned to analyze deeply. 4. Start small, stay consistent, and review yearly. Thanks for watching. Don't forget to like, comment, and subscribe for more practical investing tutorials. Let me know in the comments, what sector are you most interested in for long-term investment?